Okay, I have to admit something.
Okay.
I was looking at the earnings calendar for today. That's Wednesday, January 28th. And I almost skipped right past this one.
Which one?
Corning.
You were going to skip Corning. Seriously.
Well, yeah, I mean, my brain immediately goes to my grandmother's casserole dish.
Right. The Pyrex.
Exactly. Or, if I'm feeling tech savvy, I think about the screen on my phone. But a glass manufacturer doesn't exactly scream cutting-edge AI play. It feels a little vintage.
Vintage is a very polite way of saying boring.
I was going to say it, but yeah. But then I actually opened the report. This is their Q4 2025 earnings, and the numbers are just, they're staring me in the face.
What?
And it turns out this 175-year-old company is quietly positioning itself as the plumber for the entire artificial intelligence revolution.
A plumber is a good analogy. Or maybe the nervous system.
The nervous system.
Think about it. If AI is this massive digital brain, all those NVIDIA chips doing the thinking, well, Corning is building the actual pathways that let those thoughts travel.
And without those pathways, the brain is just a lump of silicon.
Precisely. And what we are seeing in this report isn't just a good quarter. It's a fundamental shift in how the physical infrastructure of the internet gets built.
Okay.
We are going to talk about a massive $6 billion deal with Meta, a complete reinvention of their business model, and how they are solving a physics problem that is threatening to choke off the entire AI boom.
A physics problem.
A literal physics problem happening right inside the data center.
Okay, we will definitely get to the physics, but let's start with the money. Because looking at the headline numbers, they didn't just meet expectations.
No, they crushed them. It was a beat across the board.
So what are we talking?
Sales came in at $4.41 billion. That's up 14% year over year.
Okay, solid growth.
But the number that really matters here, the one Wall Street is drooling over, is the earnings per share. That grew 26% to 72 cents.
Hold on. Sales up 14%, but profits up 26%. That's a pretty big gap. Usually when I see a discrepancy like that, it means a company just, fired a bunch of people to juice the numbers. Is that what's going on here?
That's the cynical view. And honestly, you'd usually be right. But here, it's actually a story about operating leverage. This goes back to their Springboard plan.
Right, the plan from late 2023. I remember when they announced that, the stock was not doing so hot.
It was in the dumpster. They knew they had a structural problem. They were selling a lot of stuff, but they weren't keeping enough of the profit.
Right.
So the Springboard plan was designed to fix the cost structure and the pricing first, so that when the volume came back, the profits would just explode.
So they fixed the pipes before turning the water back on.
And that is exactly what we just saw. The target was to hit an operating margin of 20% by the end of 2026.
And we are in January 2026.
And they just posted an operating margin of 20.2%.
A full year early.
A full year ahead of schedule. That 390 basis point expansion since 2023 isn't just cost-cutting, it's pricing power. It's efficiency.
Okay, so the machine is well-oiled, they're profitable. Now let's talk about where this growth is coming from, because the headline that really grabbed me, and probably everyone else, was Meta.
The Meta deal. This is the centerpiece of the whole story.
So break it down for me. What does Mark Zuckerberg want with $6 billion worth of glass?
Well, it's a multi-year agreement worth up to $6 billion.
Yeah.
And to understand why Meta is writing that check, you have to understand the nightmare that is a modern AI data center.
A nightmare. I always pictured them as these pristine, white, futuristic rooms.
They look that way, sure, but physically, they are hot, dense, and incredibly crowded. Meta is trying to train these massive generative AI models.
Right.
To do that, they need thousands upon thousands of GPUs, mostly from NVIDIA,
Yeah.
all working in perfect sync.
Like a hive mind.
Right. But to get them to act like a hive mind, you have to physically connect them. And this is where that physics problem comes in.
Okay.
If you use standard fiber optic cables to connect all those chips, you just run out of room. The cables are thick. There are just too many of them.
You essentially create a wall of plastic and glass.
You create a blockage. And what happens when you block the space in a server rack?
You block the airflow.
Exactly. You block the airflow.
And no airflow means the chips overheat.
And when chips overheat, they throttle down. They slow themselves down to avoid melting. So just imagine, you just spent billions of dollars on the fastest chips in the world, and you can only run them at 70% capacity because your cabling is choking the air conditioning.
That is an incredibly expensive inefficiency.
It's the bottleneck.
Yeah.
So Corning comes in with this new generation of fiber. It offers better optical performance, but here's the kicker.
What's the kicker?
It does it in half the space.
Half.
A 50% smaller footprint.
So by buying this glass, Meta is actually buying airflow.
They're buying real estate inside the rack. They're buying the ability to pack the servers denser without them melting. Corning isn't just selling connectivity. They're selling a thermal solution.
That makes the price tag make a lot more sense. If you're saving me real estate and power and cooling costs, yeah, I'll pay a premium for that cable.
And it's pre-connectorized, which means you don't have technicians standing there splicing glass strands by hand for weeks on end. Just plug it in. Installation costs just drop off a cliff.
And this shows up in their enterprise segment, right?
Yes. That segment grew 61% year over year.
61%. That is not a mature industrial company growth rate. That's a startup number.
And management was very clear on the call that growth is almost entirely driven by AI adoption in data centers. It's the hyperscalers, Meta, Microsoft, Amazon, all realizing they need this specific high-density fiber.
Now, this leads to something that CEO Wendell Weeks said that I found really interesting. He talked about changing the business model for this whole optical division. He compared it to Apple.
Yes, the classic Gorilla Glass model.
Explain that connection for me, because selling cables usually feels like a commodity business, right? You make it, you stick it in a warehouse, and you hope someone buys it.
That's the old model.
Yeah.
But Corning learned a really important lesson from their display and mobile businesses.
Which was Liz?
Building a glass factory is incredibly expensive. We're talking billions in capital expenditure. If you build it and the demand just disappears, you go bankrupt.
Right.
So years ago, when Steve Jobs wanted glass for the very first iPhone, Corning said, look, we'll build it, but you have to pay for the capacity. They demanded skin in the game.
Prepayments.
Prepayments, binding contracts, dedicated capacity. Weeks is now applying that exact same logic to AI. He explicitly said they're building dedicated capacity for Meta in North Carolina, but Meta is paying upfront to secure that supply chain.
That is a massive shift in leverage. It turns Corning from just a vendor into a strategic partner.
It de-risks everything. Corning plans to spend about $1.7 billion in CapEx in 2026. Normally, investors would look at a number like that and panic. What if the AI bubble bursts? What if nobody buys the cable?
But in this case, the cable is already sold. It's sold before they even pour the concrete for the factory floor.
Exactly. It turns a volatile, cyclical market into a guaranteed annuity. They are not speculating on growth. They are fulfilling pre-sold orders.
That is a much better way to sleep at night if you're the CFO.
No kidding.
But Corning isn't just AI. We should probably talk about the rest of the empire because, frankly, the AI stuff is being funded by the boring stuff.
The cash cows.
Let's start with display. You know, the big glass sheets for TVs. I feel like people have been predicting the death of TV sales for a decade, but this segment just keeps printing money.
It printed $993 million in net income for the year, to be exact. It's the engine that funds the R&D for everything else.
Now, I did see some chatter about currency, the yen. Corning has a lot of manufacturing in Japan, so a weak yen should hurt them,
Yeah.
right? When they convert those yen back to dollars, they lose money.
Theoretically, yes. And the yen has been historically weak, but this is where Corning did some really sophisticated financial engineering. They didn't just sit there and take the hit.
What did they do?
Two things. First, they just raised prices, double-digit price increases.
Which they can do because who else are you going to buy it from?
They have a dominant market share. Exactly.
Yeah.
But the second thing is the hedging. They've entered into financial contracts that lock in their exchange rate all the way through 2026, and they've even started hedging out to 2030.
So they essentially built a financial firewall around the yen exposure.
They completely neutralized it. It's a masterclass in treasury management. They turned what should have been a massive macro headwind into a total non-issue.
And that keeps the cash stable so they can funnel it into AI.
Precisely.
Okay, speaking of growth, let's touch on mobile quickly, because I feel like smartphones have gotten pretty boring, but Corning is somehow making more money on them. How?
It's their internal metric, more Corning per device. Even if overall phone sales are flat, if Corning can sell more and more advanced glass per phone, they still grow.
And they highlighted the new Samsung, right?
The Galaxy Z trifold.
A trifold, so-called,
Yes.
twice.
Like a brochure.
Mm-hmm.
And just think about the engineering challenge there. You need glass on the inside that's thin enough to bend without snapping. That's their ultra-thin glass.
Uh-huh.
And then on the outside, you need glass that is tough enough not to scratch when you throw it in your bag. That's the Gorilla Glass ceramic too.
So one phone is buying twice the amount of high-tech glass, essentially.
More than twice, and at higher margins. And that's why the specialty materials segment grew 6%, totally outpacing the actual smartphone market.
Okay, so display is the steady cash cow, mobile is getting more complex, AI is just exploding. But there was one, let's call it a black eye in the report, the solar business.
Hemlock Semiconductor.
It lost money. I think it dragged down earnings by about 3 to 5 cents a share. So what's the deal? Why is solar burning cash?
It's the classic J-curve. They are in a heavy investment phase. They're ramping up, expanding capacity for polysilicon and modules to meet future demand.
So they're building factories and hiring people, but they're not really selling the product yet?
Right. You have all the costs and almost none of the revenue. But this isn't a surprise. They're aiming for this to be a $2.5 billion revenue stream by 2028.
Wow.
And they expect the margins to eventually catch up to the corporate average. It's short-term pain for what they see as a new leg of the stool later on.
So it's a balanced portfolio. Display provides the cash, solar's the future bet, and enterprise, the AI stuff, is the rocket fuel.
And that rocket fuel led them to upgrade their whole long-term forecast. This was the Springboard upgrade.
The upgraded Springboard, right. They tore up the old 3-year plan.
Completely. The old plan was to add about $8 billion in sales by 2028.
And the new plan
Is to add $11 billion.
That's a $3 billion jump in expectations just based on what they're seeing in the market right now.
It is huge. Wendell Weeks actually made a comment that just stuck with me. He said they are looking at essentially doubling the size of the company in the coming years.
Doubling.
Doubling. For a company that started in 1851, doubling your size in just a few years it's unheard of.
And because they are generating so much cash, that free cash flow nearly doubled to $1.7 billion. They have to do something with it. I assume they're not just stuffing it under a mattress.
Share buybacks. They've been buying every single quarter since Q2 2024. They're shrinking the share count, which makes every remaining share that much more valuable. It's the standard playbook when you think your stock is undervalued.
Before we get to the big final thought, I wanted to mention a small moment on the call that I actually found really charming.
Oh, I think I know what you're going to say.
You don't usually get emotional moments on earnings calls. They're usually just, guys in suits reading spreadsheets.
You mean the retirement of Ann Nicholson?
Yeah, the head of investor relations.
She's been at Corning for 40 years.
40 years. And CEO Wendell Weeks told the story that 39 years ago, she was actually his supervisor.
She was his supervisory effectiveness instructor, I think was the title.
I just love that. The guy running this multi-billion-dollar conglomerate used to report to the woman who now handles the investors.
It says so much about the culture. Corning is unique that way. They have very low turnover in leadership. They have this deep institutional memory. When you're trying to solve 10-year physics problems, it really helps to have people who've been around for 30 or 40 years.
It's a stabilizer.
It is.
It definitely paints a picture of a company that isn't just chasing the next quarter, but is looking at the next decade.
Which brings us to the future.
Yes, the future. Because we've talked about the $11 billion in new sales, we've talked about the Meta deal, but you flagged something in the CEO's comments that suggests all of these numbers might actually be conservative.
This is the most provocative part of the entire deep dive. It's the difference between what they call scale out and scale up.
Okay, define those for me.
Scale out is everything we are seeing right now. It's connecting thousands of server racks together with these new fiber cables.
Yeah.
That's the Meta deal. That's the $6 billion.
Got it.
But scale up is what happens inside the computer, inside the server rack itself. Right now, if you look at a circuit board, even a high-end NVIDIA one, the signals travel through tiny copper traces.
Little copper wires printed right on the board.
Right. But copper has a limit, a hard physics limit. As data moves faster and faster, copper gets hot. It creates resistance. It slows down the signal. Eventually, you simply cannot push electrons through copper fast enough to keep up with AI.
So what's the alternative?
Glass. Optical to the chip.
You mean putting the fiber optic strand directly into the silicon chip?
Literally replacing the copper traces on the motherboard with glass waveguides, sending light signals directly into the processor.
That sounds like science fiction.
It's the holy grail of computing. And Wendell Weeks said on the call he believes it is inevitable. Physics dictates that it has to happen. But, and here's a key, because the timing is uncertain, they left it completely out of the forecast.
Wait a second. The $11 billion growth plan, the doubling of the company, none of that includes this technology.
Zero. The entire forecast assumes no significant revenue from scale-up.
So if that technology hits, if the inside of the computer inevitably turns from copper to glass, that is all just upside.
It is the hidden option value on the stock. You're buying the company for the scale-out boom, which is the cables between the racks, but you're getting a free lottery ticket on the scale-up revolution. the glass inside the chips.
That is a wild thought. We started this whole thing talking about casserole dishes, and we ended up talking about replacing the fundamental wiring of computers with beams of light.
That's the Corning story. They reinvent themselves every few decades. They did it with light bulbs for Edison, they did it with TV screens, they did it with fiber for the internet, and now they're doing it for AI.
Well, next time I hear someone talk about the cloud, I'm not going to think about some fluffy white shape in the sky. I'm going to think about a bunch of glass strands in North Carolina keeping the whole thing from melting down.
And realizing that without the glass, the cloud is just a really, really hot room.
Thanks for diving in with us. We'll see you on the next one.